Welcome to Data, Modern Day Gold for Algorithmic Traders, a virtual conference featuring Alpaca, Quiver Quantitative and TradingView. We have a lot of really exciting presentations today, featuring a variety of speakers and topics, and I really cannot wait to get started. So our guests for today are going to include Yoshi, CEO of Alpaca, myself, the event director of Alpaca, James and Chris, the respective CEO and CTO of Quiver Quantitative, and Pierce, the general manager of TradingView. If you're interested, you can see the respective websites are listed below on the PowerPoint. Our schedule for today, we're starting at 11 a.m. Eastern, and we're going to have an introduction. At 11:05, we're having a talk between Yoshi and myself focusing on market data. At 11:25 a.m. Eastern, James and Chris take over, speaking on alternative data, the integration with Quiver Quantitative, specifically with an algorithm focusing on Reddit. At 11:55 a.m., we're going to have a 5-minute break. Shortly followed at 12 p.m. Eastern, we're going to have Pierce, the general manager of TradingView, explore the TradingView environment via a live stream. At 12:30, we're going to go through our closing remarks and contact information. But before we start, we have a surprise at the end. So all of our attendees, stay tuned because we have something pretty cool at the end. So that being said, let's start off featuring Yoshi and myself. Exchange to algorithm, implementing market data to trade. Yoshi is experiencing some internet connectivity issues, so I'm gonna take over for now. Alpaca Securities LLC. We are a FINRA member and SEC registered US broker-dealer with a commission-free stock trading API. On the right-hand side, you could see our main website, which features the tradings, integrations, the working with us, and the community. As we offer an inclusive API with SDKs in Python, Net, C#, Go, Node, and many other languages, we are for both the developers and the traders. Including with our OAuth 2.0 integration, it allows you to build apps or front ends off of Alpaca's API. We also have a vibrant and growing community of over 80,000 members to date. Something interesting you might have noticed if you're keeping up with the community is fractional trading is now enabled for everyone. The Alpaca community is one of the fastest growing communities of developers and traders today. We have users from all across the world, spanning interests and backgrounds even more diverse than that. You can engage with us through the Alpaca community Slack. You can learn with us with the Alpaca resources, contribute with the GitHub, discuss ideas with other community members via our forum, stay updated with the most recent product updates and features through our Twitter, and stay informed with general market news and resources from all of our pre-mentioned categories in our weekly newsletter. Let's start talking about market data. A lot of market data originates at the exchanges. Now, a lot of people might be familiar with what a stock exchange is, but it would help to really discuss all the technicalities behind them. So exchanges are regulated centralized markets for buyers and sellers to trade securities. While there are over 15 US exchanges, by market capitalization, the largest stock exchanges are the New York Stock Exchange, shown on your right, and NASDAQ, which is tech focused. Some interesting facts is the New York Stock Exchange is one of the oldest exchanges, and NASDAQ is more tech-focused, was first created in the 1970s. Something I found quite interesting is exchanges can be classified as either dealer or auction markets. Now, what's the difference, you might ask? Okay, so a dealer market is when transactions happen through a dealer. NASDAQ is a good example of this. So prices are set by the dealer, who usually acts as a market maker in between. Okay, so like what's different then from like an auction market? Okay, cool. Well, transactions happen between participants in an auction market like New York Stock Exchange, and the prices aren't set by the market maker or the dealer. The prices are set by the auction method with opening and closing auctions. You might have noticed specific order types such as market on open official. These order types usually work with open and closing auctions. Some common exchanges, CBOE, New York Stock Exchange, NASDAQ. A lot of the exchanges most people are aware of, but there are some interesting exchanges that people might not be aware of, such as FINRA, ADF, Long-Term Stock Exchange, Members Exchange. It's important, I think, to be aware of all the different regional exchanges in addition to the major exchanges if you're really looking into different market data and the origins of said market data. Consolidated market feeds. Okay, great. So we know data originates at the exchanges, but what's the next step? So the SEC established the National Market System in 1970s for trading securities. The Consolidated Tape Association, known as CTA, and Unlisted Trading Privileges, UTP for short, specify the process for data collection, aggregation, and distribution. Both the CTA and the UTP outline the exact procedures for quotes and trades, which are responsible for processing and consolidating the data. Now, they're commonly known as SIP data feeds. Now, the SIPs provide the actual data feed for US markets, along with important regulatory information. National Best Bid and Offer, NBBO for short. You might have seen this if you're looking into NBBO quotes, limit up and limit down. It's important to note, though, that the SIPs are the actual processors that are responsible for distributing the data from the exchanges to the next step. So the CTA is administered by the Security Industry Automation Corporation, which is a part of the New York Stock Exchange. Now, they're responsible for the real-time trades and quotes from New York Stock Exchange listed stocks, which are classified as Tape A, and stocks from your American exchanges, which are classified as Tape B. Now, the CTA capacity for quote feed is 950,000 every 100 milliseconds, abbreviated by the CQS common or consolidated quote system. The CTA capacity for trade feed is 350,000 every 100 milliseconds. Consolidated trade system is abbreviated right next to that. And we've included the source if that's something of interest. Now, the other plan is the unlisted trading privileges. Now, this is administered by NASDAQ, which is responsible for real-time trading quotes from the NASDAQ listed stocks, classified as Tape C. Now, the UTP capacity for quote feed is 1,290,000 every 100 milliseconds. And the UTP capacity for trade feed is 1,330,000 every 100 milliseconds. So it's quite revolutionary how much data can be compressed and distributed. And so I find this interesting. Okay, so I included a graphic to kind of visually explain everything we went over so far. We have our self-regulatory organizations, as like the New York Stock Exchange, NASDAQ, along with the equity data plans, the CTA, the UTP plan. We've also included the respective tape for each self-regulatory organization, along with the data centers, which are located in New Jersey. A lot of users might have heard of trade conditions, quote conditions, sales conditions, and some be curious, what do these conditions actually mean? Both the CTS, the Consolidated Trade System, along with the UTP data, trade data feed, have specific conditions such as odd lot trades, contingent trades, market center official open. And every trade that happens is marked with the conditions underlying that trade. For instance, odd lots are trades that don't happen in the quantity of 100 shares. UTP trade data feed has similar trade conditions specific for that plan. Somewhat similar to trade conditions, except the conditions are different, but the same underlying idea that every quote that exists has specific conditions associated with that quote, such as opening quote, closing quote, an on-demand intraday auction. These quote conditions can be found along with the trade conditions in the plans, the CT and the UTP plans. They're somewhat dense, but I definitely wanted to include them just for reference as we will be distributing the slides. We went over trades, we went over quotes, cool. What's the next step? Bars. A lot of people use bars when they're building a trading algorithm. Now, aggregate bars have common time frames of 1 minute, 5 minute, 15 minute, 1 day, and common properties, OHLCV, which is abbreviated for open, high, low, close volume, along with BWAP. However, you're not restricted to using these specific timeframes for bars or even time measured bars. Tick bars are common, dollar bars are somewhat common, volume bars are common, but sticking to time bars, you could have a 12-minute bar, you could have a 19-minute bar, you could have a 3-hour bar. Okay, cool. You might ask, how do you exactly aggregate your own bars? How do you self-aggregate? Now, there's specific sales conditions you need to be aware of if you're aggregating your own bars from the tick data of the trades. Now, again, these conditions are somewhat dense, and it's a matrix of possibilities as you get conditions of conditions, but they are all specified in the CTA and the UTP plan. Now, some conditions that could affect is whether a trade was sold last, if it was a market center on opening, if it was a market center official open, or if it was a next day trade. However, this list is by no means extensive. It's a very, very complicated system, and the exact possibilities are listed in the manual. Usually, market data providers can be classified as one of the following, exchanges, market data APIs, third-party software providers. This is why you might hear of people having their data feeds going straight from the exchange. But if we're just looking at market data APIs, some standard ones could be IEX Cloud, Alpha Vantage, Polygon, Tingo. These are all quite common in the industry. Definitely not an extensive list, however. And common features for market data providers could consist of like WebSocket streaming for real-time trades, quotes, bars, a REST API for historical trades, quotes, and bars, along with the property of getting the last trade / quote, endpoints for stock splits, dividends, financial news, and broad market versus stock specific research, as if like you want to get a snapshot of the market. So we're currently in public beta, and it consists of real-time and historical price data. We have access to 5 years of historical trades, quotes, and bars, along with WebSocket streaming for said trades, quotes, and minute bars. They are direct feeds from the CTA administered by the New York Stock Exchange and UTP, administered by NASDAQ, as we discussed, commonly known as SIP data feeds, and together it offers 100% market volume. And we have basic and pro plans for users of all levels. So as we're wrapping up Alpaca's presentation today, I hope everyone got a little bit of an insight into how data goes from the exchange all the way to the end user. It definitely is very complicated, but I think it's definitely important if you want to understand the process and perhaps the reasoning for why specific instances occur in your data. So that being said, I'm going to transition it to James and Chris from Quiver Quantitative, who will be talking about alternative data, specifically with an implementation of Reddit.
Hi, I'm James Kardatsky. I'm the CEO of Quiver Quantitative, and I'll be presenting alongside my twin brother and co-founder and CTO, Chris Kardatsky. So I guess in today's presentation, we're just going to give you a quick introduction to alternative data and talk a little bit about why it's a very relevant tool right now and why it can provide you with some alpha generating insights to help you improve your trading strategies. We're going to talk a little bit more about what we've been building at Quiver Quantitative and what we're doing to make alternative data more accessible. And then Chris is going to walk you through a brief case study showing how to backtest a simple Wall Street bets trading strategy using data derived from our API, specifically looking at what a trading strategy that selected the top most discussed stocks on Wall Street bets every week would look like, how to implement that, and then he's going to share a little bit of results just from that simple backtest. And finally, we're going to open it up for about 10 minutes of Q&A to answer any questions that you guys may have about our presentation. So at the bottom of the page here, you can see a little bit of our backgrounds. As you can see, I'm a bit more heavy on the finance and economic side of things. Chris is a bit heavy on data science and statistics. Both of us are really passionate about investing and passionate about data science and programming. But what I'd say really inspired us to found Quiver Quantitative was an internship I had at Adage Capital last winter. When I was working there, I really got my first exposure to alternative data, and I first saw how useful it was to professional investors and how important it was as part of their investment decision-making process. So just a quick introduction for those of you who may not be familiar with alternative data. This term basically refers to anything outside of traditional financial data sources. So for example, instead of looking at income statements, balance sheets, price movement, it could be looking at how a company's social media following changes over time. It could even be looking at like how many cars are parked in different companies' parking lots to try to predict what their future earnings are going to look like. So you can imagine there's like all these data sets out there that are super useful for thinking about how a company is performing, what their price movement might do in the future, that historically just were not used, I guess. Like nobody would tap into these data sources. Big data wasn't really as common as it is today. So only within the last decade or so has alternative data really started to take off and make it, to be a big part of the hedge fund industry and the investing industry across the board, not just like a small selection of quant funds, but really it's being used at, almost all the big hedge funds right now, and even, I guess, many of the smaller funds as well. And even like fundamental shops where people traditionally may not do super heavy data analytics work, alternative data is really starting to kind of take over the industry. So you can see that $2 billion was spent on alternative data last year. The number has been growing about 60% year over year. So obviously it's growing very quickly. And what's even more interesting is that a lot of these data sets are often not particularly difficult to understand. During my time at Adage, I saw that a lot of the data sets they were using didn't really require like a deep financial background or even like a deep data analytics background to understand and make use of and find unique insights from. So in many ways, I thought that these alternative data sets could be just as useful for people outside of the institutional space as they obviously were for people, on Wall Street. However, as you can see in the graph on the right here, most alternative data sets are currently priced for tens of thousands of dollars a year. That just makes them completely inaccessible to anybody who doesn't have $1 million, $100,000 budget to spend on data every year. So for anyone who's not managing a $1 billion book, not managing hundreds of millions of dollars, alternative data has, until very recently, I think, been just completely inaccessible, and it's been really hard for anyone in the retail space to kind of tap into some of these alternative data sets that have really taken off recently. So that was our main inspiration and the main reason we wanted to create Quiver Quantitative. And our mission really here is to bridge this data gap between individual investors and Wall Street. And we want to make sure that everyone's getting access to these alternative data sets that are obviously very useful and very useful for generating unique investment insights. So the first step, I guess, that we took in order to kind of accomplish this goal and make alternative data more accessible was we had to go out and actually start scraping these data sets and start collecting the data for ourselves. So you can see here's a list of all of the data sets that we currently are scraping and aggregating. When we first founded the company last year, we started with about 6 of these. Since then, we've been adding about 1 or 2 new data sets to our platform every month, and we look to continue doing that to the future. So you can expect this list to grow over time. But in general, we kind of divide our data sets up into 3 major classes. On the left here, you can see, first of all, we look at several consumer interest data sets just to track what people are talking about, what retail investors might be interested in. For example, this Wall Street Bets discussion data set, which Chris will be touching on a bit more later. We think it provides a really great look into what retail investors may be really passionate about, help people kind of spot the next GameStop situation before it occurs. We also look at Wikipedia page views to see which companies are getting the most interest from people just, via Wikipedia searches. We track corporate Twitter follower counts over time. And then we also look at Stack Overflow discussion. We track discussion on the SPAC subreddit. And then we also look at discussion on Hacker News. So all these data sets just trying to get a look at what, consumers and what retail investors might be interested in talking about. So in the middle here, you can see that the second set of data sets we have, we do a lot of work collecting data from government agencies and also looking at data sets that pertain to politics and just what's, the inner workings of our government. So you can see at the top here, we have data sets looking at personal stock transactions by US senators and representatives. Just for the last election cycle, we came up with a new metric called political beta that is basically a way of estimating how each company is going to be affected by different political outcomes. So for example, you could see which companies were most likely to perform well if Biden won versus which companies were most likely to perform well if Trump won. And, obviously this is a good tool, not only to kind of manage your exposure to certain political outcomes, but also we know that a lot of our users felt very strongly about how the election might turn out. So it just provides another way that you can kind of craft a trading strategy around this, alternative data set. In addition to that, we also look at different violations and fines that are being assessed to publicly traded companies. We look at government contracts to see who's being awarded money from different government agencies. We track corporate lobbying. We look at product recalls. We do some work with patent data. And then also, of course, we've been tracking the progress of different COVID-19 clinical trials. So that brings us to our last set, which is a small collection of ESG data sets we've been working with. First one of these, the corporate jet tracking, is very interesting. This is a data set that's been used by hedge funds for several years now. And it definitely has a lot more, qualitative applications versus quantitative. Often hedge fund analysts will study corporate private jet flight logs, basically, to see where company planes are taking off from and landing, as this can often be a good way to predict future partnerships, can be a good way to predict potential M&A activity or potential future investments. And a good example of this is a couple of years ago, there was a company called Occidental Petroleum, who had a corporate jet that flew from their corporate headquarters into Omaha, Nebraska. And this tipped off a lot of hedge fund analysts that potentially an investment from Berkshire Hathaway could be coming. So there's a lot of buying activity into the company. And then just a couple days later, it was announced that Warren Buffett was going to be taking a stake in Occidental. So it sent the stock price up like 5 or 10% or something like that. So just a super interesting data set with, I guess a lot of interesting applications, but obviously not quite as quantitatively focused as some of the other stuff we have here. We also track H-1B work visas to see which companies may be expanding or contracting their workforce. We look at CEO compensation, insider trading, shared ownership between companies, and then we also track facility emissions. So here's just, I guess this is just the collection of data sets that we are currently scraping and aggregating. But like I said earlier, we're always continuing to add new data sets to our platform. So you can expect that we'll be adding more to this list as time goes on. And I should also note that we're always open to suggestions on what data sets that you find interesting and would like to see added to our site. I think our contact information is on the last slide, so definitely feel free to reach out if you see any alternative data sets out there that you'd like to be able to get access to and that you think might be a good fit for our platform. So the next step is, after scraping and aggregating this data, we want to present it in a way where it's really usable for people and really easy for everyone across the spectrum, from retail investors to hedge fund professionals, to be able to easily extract insights from these data sets. So that's the main goal of our web platform, which is found at www.quiverquant.com. This is a completely free platform. You can go there right now, create an account. There'll be no charge. And we basically provide two different ways of finding insights and kind of tapping into these data sets that we're scraping. The first you can see here on the right, we let you view data by ticker. So if you already have an idea of a company that you're considering investing in, maybe you just want to do a bit more research into a company, make sure that you're not overlooking anything. We let our users do a ticker search, and then they can immediately see a selection from a lot of the different alternative data sets that we're scraping for that company, just to kind of give a holistic view of everything we're collecting for that particular name. On the other hand, there's a lot of people who come to our platform and maybe they don't have a specific idea of a company they want to invest in, or maybe they're just really passionate about a specific data set and want to generate some ideas based on how they feel about one of the topics that we cover. So for that, we also have different data dashboards for each of the sources that we're scraping from. And this makes it really easy to quickly pick out kind of winners and losers within that specific data set. So you can see an example here on the right. This is our Wall Street Bets data dashboard. You can see it's, we have a chart there showing which companies have been mentioned the most on Wall Street Bets over the last 24 hours. We also let you do a search to see for a specific company how its mentions have trended over time. So with our data dashboards, we're really trying to aggregate everything for a specific data source into one place and then make it really easy for people to quickly pull insights from that. So in addition to the web platform, we also want to give people the tools that allow them to do kind of a deeper dive into the data sets, and then also integrate any of our data feeds into their own projects or their own products, if that's something that they're interested in. So the Quiver API was just launched last October. And what we're looking to do here is, first of all, we'd like to start partnering with trading platforms, financial news providers, and then other enterprises so that they can tie alternative data feeds into their own products. Just in general, this ties into our mission very strongly, but we'd like our alternative data set to be, reach as wide of an audience as possible. And we really want to make it so that everyone has access to a lot of these alternative data feeds. So through our Quiver API, anyone who's interested in building a project or building something on top of our data feeds, it's very easy to do so. We can easily work out licensing agreements where they can tie the data feeds directly into what they're working on. And the Quiver API also allows anyone to do deeper analysis on these feeds for themselves. So the web platform is nice for pulling insights and stuff and quickly visualizing the data set, but it doesn't really provide the capabilities for someone to do deep research or analysis on the data sets that we're scraping. So with the API, you can tie into the full historical data feeds we've gathered, download all of that data on your own, into your own programs, and then kind of do your own deep analysis on top of that. And then finally, also, if you'd like to execute live trading strategies, it's very simple to tie our data feeds into Python, into any programming language of your choice, and then start doing back testing and start executing trading strategies on top of that. This is something that my brother's going to be talking on in just a little bit, but with just a few lines of code, it's very easy to pull one of our data feeds basically into your own scripts. So as you can see on the right here, we have a pretty simple pricing model for any individuals or people outside of the commercial setting who want to access our API. And in just a few minutes, it's easy to get set up and start tying into these data feeds directly. So with that, I'm going to turn it over to my brother, who's going to be talking a bit more about a specific case study of how you can use the Quiver API to backtest simple trading strategy on top of our Wall Street Bets discussion data set.
Yeah, thanks, James. So I just wanted to give you guys kind of a simple example of something that could be done with one of our data sets. And with all the news around Wall Street Bets recently, I decided that that would be a good choice to show just kind of a simple piece of analysis. And the goal here is going to be to backtest a trading strategy which is built around which tickers are being mentioned the most on Wall Street Bets. First, I guess I'll give you guys some summary statistics of the data set. So basically what we're tracking with our Wall Street Bets data set is ticker mentions. So we post through tons of Wall Street Bets comments and we extract mentions of specific tickers. And you can see we've collected 3.3 million of these ticker mentions going back to 2018. And that's a number which is growing pretty exponentially. We collected about 250,000 mentions from 2019, 2.1 million in 2020, and we already have collected almost 1 million in 2021, many of those being GameStop. You can see below is a graph of the daily ticker mentions we've collected. And then at the bottom, we also collect some sentiment data, so collecting data on stuff like mentions of calls and puts, as well as some other sentiment measures. And you can see that the sentiment of the subreddit has generally been bullish over the period that we've collected data from. So here's the strategy. It's really simple. The goal is to get data on the previous week's Wall Street Bets discussion, and that's done using our Quiver API. And I'll show you guys the code for doing that. It's really simple. It's just a few lines of code. And then identifying the 5 most mentioned stocks from that data, buying those stocks at the start of the trading week and sizing the positions based on how much they were talked about in proportion to each other, and then selling the positions at the end of the trading week, and then repeating. So basically just weekly rebalancing a portfolio based on which stocks we talked about the most over the past week. So a really simple strategy. We're just trying to kind of see how you would have performed if you basically just traded Wall Street Bets most recent meme stocks with about a 1-week delay. So here, I wanted to show you guys how to get the data into Python. So it's really simple. We built a package around the API. So you just import the Quiver Quant Python package, connect to the API using your token that you receive, and then read in the data from the endpoint. And below you can see an example of what the data frame looks like from one of our endpoints. So each row here, as I mentioned earlier, corresponds to a ticker mention. And we also have columns with data on stuff like the number of mentions of puts and calls and sentiment. And this is one of our simpler endpoints. We have other ones where you can see like the full comment text of the comment mentioning the ticker. But for the purposes of this example, this endpoint will be just fine. And on the next slide, I'll show you guys what the results ended up being when we backtested this strategy. I'm not going to walk through all of the code to implement the backtesting, but if you're interested in seeing that, feel free to shoot me an email and I can get you a copy of the Python notebook. So here's what it looks like. Obviously, I'm sure you all know what the big spike on the right is from over the past couple months, all the crazy movement around GameStop, AMC, and other meme stocks. Over the long term, there hasn't really been any significant alpha, I guess, generated from just mimicking what's being talked about on Wall Street Bets with a 1-week delay. So, I mean, this obviously isn't something that we're endorsing that you start doing yourself, but I do think it's a kind of an interesting piece of analysis to look at how a portfolio that was based off a slightly lagged trading on Wall Street Bets discussion would perform. And on the next slide, I just want to give you a look into what the portfolio was comprised of over the about 2.5 years that the back test went back. You can see the most frequently held stock was SPY, which it makes sense. It's no matter what the market conditions are, people are interested in how the market's doing as a whole. And then second and third are some like more traditional Wall Street Bets meme stocks like AMD and Tesla, whereas some newcomers like GameStop are more towards the middle of the list. So here are kind of the primary use cases which we imagine for the Wall Street Bets data. Risk management is the first thing that comes to mind for me. Obviously, if you're, for instance, in a short position in a company, it's probably worthwhile to keep an eye on whether there's retail interest building in the ticker that you're trading. But there's also stuff like gauging retail sentiment. And this doesn't just apply to sentiment on the market as a whole, but also towards sentiment on individual tickers. So for instance, below you can see a visualization I made of sentiment towards GameStop on Wall Street Bets versus like the number of mentions of GameStop. And lastly, identifying the meme stocks of tomorrow. So obviously you can see the utility in keeping track of where the focus of Wall Street bets is turning. And often you can kind of get a heads up before something really blows up into the discussion. Like often there's a lag of a couple days before it starts entering the discourse, and then when it blows up and turns into like a GameStop or an RKT type situation. So with all that being said, we wanted to open up the discussion to some Q&A. So if you guys have any questions, just let us know and we'll do our best at answering them. So one question was, do we source any fundamental data? And the answer to that is right now, no, not really. We kind of see that as something that's already being done by, starting to be done by a lot of other companies. I think a lot of fundamental data, you're able to get quite a bit of fundamental data for free right now. And there's quite a few other companies who've kind of made that their mission, to provide like a Bloomberg alternative basically, but just for fundamental data. But we really saw like a niche in the alternative data space. Like if you Google like alternative data, if you go to like Quandl or something, it's not even offered to individuals. It's only offered to institutional clients. So far our focus has been mainly on just providing that alternative data.
I see another question here. Have you looked at scraping StockTwits? I believe recently StockTwits has kind of taken over they have their own commercial product that they sell if you'd like access to their discussion feeds. So you have to go through StockTwits if you'd like to get access to that. I think they used to be a bit more permissible with like what you're able to scrape from their site, but you know, now that they're selling that on their own, I think that you should probably go through them. So what kind of NLP processing do you do to calculate your sentiment scores? Chris, would you like to talk on that?
Yeah, I can handle that. So it's a variety of things. Like we provide like basic built-in sentiment measures. Like we use like the Vader sentiment score in Python, for instance, and just some more commonly commonly used methods of like judging the sentiment of comments. But we also do some proprietary stuff. Like it's obviously a bit more complicated to judge the sentiment of like discussion on a specific forum. And there's a number of things we can do on our end to try to, try to factor in how discussion happens on Wall Street bets. So we also have been working to create some of our own like proprietary sentiment scores. But at the most basic level, we also provide stuff like just number of mentions of like puts and calls, which when you look at that data, I think it provides a pretty decent proxy to the sentiment of the sub as a whole, I guess, when you're just judging it from an eyeball test.
Yeah. One of the issues with Wall Street bets in particular is that there's, you know, a lot of lingo and stuff on that subreddit that's super specific to that community and isn't going to be found in your typical, you know, like natural language processing engine. You know, phrases like diamond hands, rocket ship emojis, all have really strong positive connotation on Wall Street bets, but, you know, aren't really common phrases that people are throwing around. So with that in mind, we've been trying to do some work to like do some more keyword tracking and making sure that we're able to incorporate some of those very loaded phrases into what we have available to offer. Wall Street bets becoming mainstream and having a public focus now, do you think there's still any alpha to be extracted from monitoring it anymore? I will say that, you know, recently, obviously there's been a lot of interest in this place. I think that almost all of the major hedge funds are now obviously aware that this is something that's worth monitoring. And there's been a lot of interest from hedge funds to start tapping into this data feed. So I definitely think that, you know, there's going to be a lot less like just, you know, like pure alpha to be found from these data sets. But I think that one of the most important ways that you can use this data is, as my brother mentioned earlier, as like a risk management tool, where maybe you're not the only one who's able to predict what Wall Street bets is, you know, suddenly going to be hyping up in the next week, but it can still be a very valuable way to make sure that if you have any short positions, they're not exposed to all this like retail interest, and to kind of stay ahead of the curve as far as making sure that you're not getting positions blown up by the Wall Street bets community.
I see a question. Any plans for adding similar data sets ex-US? So yeah, right now, especially our government data has been really US focused, which is probably, I mean, a product of where we're located out of. But that's definitely one thing we're looking towards in the future is we have a lot of these data sets, and we're starting to look towards more like, I guess, similar corollaries. So for instance, obviously there's the obvious example of looking at like other countries, government disclosures and stuff, but there's also stuff like looking at, for instance, other subreddits aside from Wall Street bets to get their discussion data and kind of, I guess, building out a bit more diverse portfolio of data.
Have you had any issues with sites banning your servers due to your web scraping? What about privacy concerns around scraping? Example, Redditors not wanting their comments scraped. To answer the first part of that question, when we first started out, we definitely were, a bit less cognizant, I guess, of some like the licensing in terms of use agreements that certain sites had that we were scraping data from. So there were a couple instances like very early on where we received cease and desist letters from certain sites that we were scraping data from. But basically ever since then, we've been extremely cognizant of all the licensing restrictions, been making sure that all of our scraping follows the acceptable terms of use, so that we don't, avoid getting one of our data sets in jeopardy of needing to be pulled from our site, or that we need to stop scraping from it. So definitely, that's an area where we need to put a lot of focus just to make sure that we have the correct legal rights to scrape the data and then repackage it and sell it. And then in terms of privacy concerns around scraping, that also is something that we pay a lot of attention to. Obviously, there are a lot of alternative data companies out there who will basically resell very personal information, whether it's, selling your data on like your credit card transactions, or, gathering your personal information from, like your house address, like things like that. Like very personal consumer information is being sold to hedge funds and often like occurs within the alternative data space. So we try to make sure everything that we have is pretty far removed from any of these potential privacy concerns. We aren't scraping like any, personal information. We're not scraping like credit card data or anything like that. There may still be an issue, I guess, of like some Redditors, for example, not wanting their comments scraped. But again, like this is all kind of publicly available information that, when you post on or any Reddit community, basically it's just public and out there. So we're to a certain extent just kind of aggregating what people are already putting out in the universe themselves. And also the data sets we provide are, anonymized. We're not like tying people's usernames to the data feeds we provide. So it is pretty far removed, I guess, from most privacy concerns.
I see another account was that negative 296% return. That was positive 296% return. But if there was ever an example of past performance not guaranteeing future results, this would probably be it. That was mainly, I think there might have been like a 10 or 20% return above market prior to the big GME spike. But I mean, obviously the past month has been the main driver of alpha on that simple backtest. I do think though that like that was just like pretty much as simple of a strategy as you can build from the Wall Street Bets discussion. And I do think there's the potential for generating more stable strategies, I guess, using a bit more advanced techniques, I guess.
Owen McCadden asked, is there a free trial for your API? Currently, you can get a 1-month free trial with the promo code Twitter in all caps on checkout. And I believe after this presentation, there may be some more info about a potential longer free trial that's available as a prize or something. I don't want to ruin Jason's surprise here at the end, but stay tuned for that, I guess. So yeah, I mean, I guess that's going to be it for Q&A for now. But just to wrap up and give you an idea of what we're looking to work on going forward, you should keep an eye out. This April, we're planning on launching a mobile app to the Apple Store and then the Google Play Store. So this is just going to basically bring all the features of our web platform to mobile devices. So it's super easy to keep on top of these alternative data sets from your phone. And again, we're going to continue kind of trying to work on new partnerships with any other like trading platforms, any other companies in the investment space, basically trying to work to get our data in as many hands as possible. And then of course, always continuing to come out with new content on our Twitter platform, through our newsletter that we send out to all of our users, doing a bit of our own analysis in these data sets and trying to extract insights and sending it to everyone who I guess is following along. So definitely stay tuned. You can sign up at quiverquant.com if you want to stay in the loop on all the latest, I guess, features that we'll be adding. And then also through our API, you can start tying directly into some of these data feeds.
Before you sign off,
I think we'll now be going to break.
Hold on. Before you sign off, I see a couple. We still have one more minute. I see a couple questions about bot noise on Wall Street Bets, and we do quite a bit of work on our end to try to remove that sort of noise, or remove the any individual basically having an outsized impact on the data that we're collecting. So that is one thing we're cognizant of. But with that being said, yeah, thanks to Jason for having us on, and we appreciate you guys' time and questions. And yeah, I think we're going to be going to break now.
Thank you, James and Chris. That was very informative. I know a lot of our users are going to be interested in looking at different types of alternative data that they can use. So yes, now we're going to be taking a 5-minute break. We will resume at noon, 12 p.m. Eastern with Pierce Crosby, the general manager of TradingView. So enjoy the break. Sit back, relax. If you have any questions, feel free to reach out in our Q&A box. We have Alpaca team members there to support. See you after the break. I hope everyone enjoyed their break. Now that we're back, I'm going to introduce Pierce Crosby, the General Manager of TradingView. He is here to talk about exploring the TradingView environment, which is going to be a live stream on the multiple features of TradingView. Pierce, it is all you.
Thanks, guys, for having me. Always good to be hanging out with some actual algorithmic traders and talking about markets in general. As Jason said, I'm the GM for TradingView. I sit in New York. However, you guys are actually catching me out in California for a brief extended vacay. Well, not really vacay, but remote work. For those who aren't super familiar with TradingView, we're now, I guess, close to the 65th, maybe 68th largest website in the world. Well, I guess in terms of public data on a 90-day rolling average, we're the 75th largest website in the world. So we sit above CNBC, CNN.com, as well as most other kind of financial media publications that you'd see out there. So really, TradingView, in a nutshell, is a place where people connect and talk markets. We have everything from social features to things like live streams, as well as things like news, top insights, etc. But most interesting, of course, for this conversation is our core charting tools. So again, all this is available for free. We don't actually charge for usage of about 80% of our product, and the remaining 20% we have premium features, which I can go into later. But you can find all this information. Just go to tradingview.com/GoPro if you want to see some more of the premium stuff. So I'll close this out, and then we'll actually look at my version of TradingView today. So once you're signed into TradingView, you'll see kind of a more customizable experience. I have a dark color scheme for my personal preference. Just you stare at screens long enough, ultimately, white colors start to really mess with your eyes, which is very much the case with myself. So here we are, kind of in the product itself. Core features that you'll start to see are things like the obviously charting libraries. We have real-time alert tools, social chats, as well as a bunch of other features involved within the kind of overview product. We license in terms of data. I know that was a common conversation in the previous chat. We license global economics data. We also license global fundamentals data. So we pull in data from both CapIQ, FactSet, and a few other providers to kind of round out our global data repository. We also work directly with about 65 equities exchanges, as well as 20 or so crypto exchanges. And then for FX data, we pull in data from about 5 or 6 different broker dealers over in Europe, which provide most of our real-time rates for CFD products, equities products, indices products, and of course spot rates for various currency pairs kind of around the globe. So yeah, this is just kind of the high level. Obviously, I'm kind of delaying the pitch, if you will, from a core technology standpoint. And obviously what we want to get to talk to is specifically kind of the overlap of TradingView and Alpaca and what that looks like from a product standpoint. So the core product, actually I have it loaded up on a separate tab, so I don't even need to load that. The core product is a advanced analytics and trading platform. And pretty much what you see here is our core homepage for the advanced chart. Once you're here, you can definitely see kind of the scale and complexity of the tools that we do offer for folks who really want to take that deeper dive. I just listed a couple different types of assets that we obviously have on the platform. We have all, say, government bonds for global listing. So if you wanted to look at, Japanese bonds versus US bonds, we have all that data. And to be clear, not just the spot rate, but obviously yields as well. Bitcoin, obviously a very popular conversation as of late. So we pull in, again, data feeds from upwards of 20 different crypto exchanges. Spot futures data, we have global futures from CME, CBOE, and a few other, CME, CBOT, as well as a few other global futures providers as well. And funny enough, we actually just recently, as of this month, launched the availability of global futures data for actually $4 a month. For most providers out there, the lowest price you're going to get for global futures data is closer to $100 a month. And so now we have global futures available for $4 a month. For equities data, it's readily available for for anywhere from $1 to $2 a month as well. So all in, if you wanted to get real-time global data, it costs you anywhere between $2 to $5 a month across the world. So this is kind of the day-to-day for people on TradingView. They live in the chart. There's a lot you can do within a given chart panel itself as well. All this is completely customizable to the exact look and feel that you might want for your daily setup. And a lot of people think that we are, like a technical analysis platform, but we do a lot more than technical analysis, to be clear. So one core feature that I think is really interesting is that people on TradingView actually code up their own custom scripts. And so we actually have our own native language called Pine, which you can see here is kind of the terminal function. So I could actually code, if I was a coder, actually code up my own scripts natively inside of TradingView. And so what you see here is actually a script that was shared by a community member, which looks at a mashup of every moving average in a single pane, and then applies a heat map over top of that. And so, of course, it's somewhat helpful for me just to get a general idea of what's happening in the market without having to look at specific technical levels or anything like that. And then from a global fundamentals perspective, anything that you can possibly want to chart from a fundamental data perspective, we also have that in TradingView. I mean, if you really cared about after-tax, after-tax income, you could chart it. I wouldn't encourage that specifically, but relatively speaking, you want to do something simple like just earnings data. Let's see, price to earnings, what's just earnings? Retained earnings, equity and earnings, pre-tax earnings. So I'd say retained on we'll do a quarterly basis rather than annual data. We can actually start to zoom into the global fundamentals of a company rather than looking specifically at the overall, say, technicals or key indicator of a platform, something like that. So you can obviously change the chart types. For fundamentals, obviously it's going to be a little wonky because we have negative fundamentals here. So you can invert the chart if you want, but yeah, from just a different product perspective, you can kind of display this in any way, shape, or form. I'll pull up kind of the core chart itself and give you guys a sense of like what charting capabilities or functionality we have. So obviously people are very fond of things like area charts, Renko line charts, Kagi charts, point and figures for the old schoolers, and all these are kind of plug and play, so they all come with the product. There's no additional needs to kind of pull in more data. And so what we've kind of done as a product is, again, position ourselves kind of the all-encompassing front end, but obviously that leaves a lot to kind of build in when it comes to trading and investing itself, right? So we, again, specialize in front-end tools, but from the actual back-end side of things, the kind of next step is obviously how do we make this actionable? So a few years ago, we started building in level 2 data. So you can now get real-time level 2 data for a lot of various markets and assets. And the next step would actually be, how do we take from level 2 to actually the actual trading side of things? So here you see, it's asking me, how do I connect a various broker-dealer? So I would actually pull up the charting panel itself down here. And these are the number of connected investing firms today. We do have a lot more in the pipeline, but it's a pretty good bench of partners thus far. Alpaca was actually one of the early adopters in the US of the product. And so we're big fans of the company and kind of what the team is building in terms of a developer first model, because that's very much our approach with With TradingView is, we're much more quantitative by nature in terms of the audience that we look to address, and thus why our strategy testers, our pine editors, et cetera, are kind of a core, if you will, for a lot of kind of sophisticated traders. So in terms of the next steps for this, we have an open architecture on the back end. I'll show you what that looks like here. So basically, we have a open trading architecture so that people can actually review this at any time they want to understand what data is being grabbed or stored on TradingView side, and what data is simply being passed to Alpaca. So in this case, for Alpaca, we use OAuth to connect directly. And so I'll show you now, it's pretty seamless. It just sends that OAuth recognition over to Alpaca to confirm that, I am who I say I am, and I'm actually able to access my own account. So here's a TradingView. If you need to email me, feel free, but I'll mark you as spam if you, keep emailing too often. So hopefully the request call is being brought back, and now we're live. So I actually have a position on today, just as an example. Recent volatility, for the most part, has kind of kept me on the sidelines. So not a lot of trading activity to see here, but in terms of how this actually works in real time, now that I have my account connected, I can actually pull up the order management ticket and actually see what spot price is available with Alpaca. So more or less, now I can trade in real time from TradingView charts. And so this is kind of the best of both worlds, right? Because obviously we're never going to be a trading firm ourselves, but we do want to work with trading firms in order to actually complete that user life cycle. So say I made a simple trade today, I can put in a different order. Say I wanted to do just a simple market order. You could do limit orders with various take profits and stop losses, obviously both on buy and sell position types. And if you wanted to put your positions way outside the the bid ask, you can, and they'll just sit there in real time. I'll show you just like an example of what that would look like from a simple ask perspective. But I mean, the idea here, right, is most people want to connect to Alpaca programmatically within their own systems. A lot of investors just want to kind of get a quick snapshot as to, how do I trade and how do I connect as soon as possible. We aim to make it as simple as possible for those who are not nearly as algorithmically driven, or might have kind of a semi-discretionary strategy or approach. So simply put, if I had 100 shares that I wanted to sell, and actually I can't make that order because, well, I'm trying to do a bracket, but I don't need to do a bracket for a sell order. But yeah, simply put, then I can more or less make that transaction in real time from TradingView. So it's relatively simple, and I think that's actually the benefit of what we've built with Alpaca, is the simplicity of being able to input those orders. Ideally, Alpaca will launch more markets. We're very excited about that opportunity, and be applicable to a lot of different investors around the world. Just by kind of background, the U.S. is the largest market for TradingView, but we have audiences in upwards of 180 countries. Anywhere from whether it's Japan, South Africa, Singapore, Hong Kong, Australia, Malaysia, you name it. We have audiences, and so what's really cool is that I, as an individual investor, can connect with fellow traders who, might be also just sitting in their basement trading foreign currencies or what have you. What's cool too is, for people that are tuning in from around the world, is we also have various language versions as well. So if you're Turkish, we actually have a completely Turkish version of TradingView. Everything you'll see is natively translated, so you don't have to worry about using Google Translate or something like that. And these are all ideas that are actually published by people in Turkey, which is kind of wild. But we have a huge trading audience in Turkey. Don't ask me how or why. We also pull in, local Turkish news. So you have real-time news feeds in Turkish for kind of your use as you see fit. Everything's globally translated as well. So again, if you want to pull fundamentals data, quick snapshot on financials, technical signals. And ultimately, the best part is, connecting with fellow investors. This would be a great way to tap into, your Turkish audience, if you will. So this guy is an example. No idea who he is, but in terms of his, kind of breadth of experience, I mean, he's been publishing on TradingView for quite some time. So the real kind of benefit of TradingView is it's not just a trading platform. It's a great place to connect with fellow investors and traders. And yeah, I mean, I actually don't know what this says because it's in Turkish, but I'd assume that these are number of followers. So he's got 2,800 people following him. Almost 10,000 people have liked his trading and investing ideas. And it's a pretty good kind of sign of confidence that he knows what he's doing. So that's, I guess, the stage one of TradingView. So for me, the way I use it on a daily basis, I obviously follow a lot of people that I can sort by to make sure that I, really kind of follow the people that I trust and know. So I also only really trade stocks and futures. So I can look specifically at the U.S. stock market and see, what are the most popular ideas for that given market and why. So, Angus is actually a moderator for us, but he also produces really interesting trading ideas. But this guy, top trading signals, looking at, certain technical levels and breakouts. A lot of people talking about the, sell-off that we've been having over the past couple of days. And that seems to be kind of the predominance of the conversation. People using things like fractals, standard TA, etc. And what's really cool, and something that actually people don't know a ton about with TradingView, if I find an idea that I do actually like a lot, I don't want to go through the process of kind of recreating this myself, right? So funny enough, TradeStation actually published this idea on TradingView. TradeStation is another broker partner that we have on TradingView. So, I can see how that idea is done over time. And if I like the TA or the kind of the different types of analysis that they're doing, obviously looking at MACDs and moving averages across the board, what's really cool is I can actually just copy that idea myself. So there's this hidden feature, not so much hidden, but I guess it's maybe not as talked about nearly as much, to make it mine. And once I click this, it'll take me back to that chart page, which is, again, where people spend 90% of their time. And more or less, it copies over a lot of the core tools and features that you actually just saw on that chart. So now I actually have those real-time ideas on TradingView, and I can do with it what I want. So if I wanted to actually add my own versions of this, or kind of do some simple updates, and more or less, abbreviate certain areas that I think are really important for the overall investor. This is a simple way to basically take what previously was a static image and make it your own, and actually continue to annotate and update over time. We think that this is kind of a huge value add for customers, because basically, we're talking about a very significant collaboration tool where people can actually, take an idea from a friend, add their own analysis to it, then basically publish that back out into the world and see kind of how friends kind of perform or improve each other over time. So I think that that's pretty good. I guess another feature that we could probably talk about just a little bit, and actually this is pretty applicable to the algorithmic trading side of things, is our alerts tool and alerting functionality. Again, we don't talk about it nearly enough versus where we could, but the alerts tool basically is a way for you to automate your level setting so that you don't have to be glued to your screen every day. And I don't know if people are familiar, but we also have a very popular mobile app. So the alerts that you build can actually be set across device, and then I can get a simple notification on my phone anytime levels are crossed or certain indicators are broken or kind of divergences are had. And you can make indicators and alerts off of everything. So whether it's a volume study, whether it's mechanics of the market, certain kind of indicators, et cetera, that are getting kind of pinged, those are all made into alerts. And on a daily basis, we have about think 15,000 alerts made. And in terms of the numbers of those fire off, they're in the millions. So people are firing off millions of alerts every day to basically help them improve their overall trading. What's cool too is that obviously you can fire them off natively to TradingView, so that you'll get notifications from kind of a web browser perspective, from a mobile application perspective. But in addition, you can send them to your email. You could also create a webhook URL. So for those who have their own trading systems or want to hook this back into Alpaca, actually, you could actually have this redirect to an endpoint that you have set up to basically trigger based on a specific number of features or parameters set. And so if I was to redirect this to say piercecrosby.com/Apple alert, once that webhook fires off, my own internal system could more or less, trigger that trading transaction and then write an order to Alpaca. We haven't actually done full automation ourselves, and the reason being is, we very much think that the pulling the trigger, if you will, is still very much an activity for the individual investor to do themselves, versus TradingView building automated strategies and then having them run in real time. But safe to say, we're really not far away from that. It's just a matter of the industry kind of shifting in that direction to a critical point where, it's kind of demanded by all our customers. But, to date, we've really kind of focused on discretionary trading. And that's simply because, we don't really want to be in a place where somebody accidentally codes something incorrectly in Pine and that ends up kind of blowing up their account or something like that. So we've stayed away from strategies similar to, say, eToro or something, which is, very famous for copy trading. And we very much are not a registered, broker dealer or have any interest in going in that direction. So we have to be very careful when it comes to trade automation and kind of the agency of somebody who's committing to trade automation. So I think that's pretty good summary of the platform. On top of that, when we go back to global fundamentals, which is super popular, what's interesting too is that you can not just look at that in kind of chart format, but you can actually use our global screeners as well. So we have a ton of different either market conditions or fundamental descriptions or actual kind of company description information that you can filter and sort by. In total, I think we have excess of 500 different things that you can sort and filter by in order to basically give yourself a pretty clear indication as to things that you're interested in and why that should be compelling for you over time. Again, what's really cool is all these can be saved, right? So that, once you've built your standard filters, you don't have to do this every day. When you come back to the market, you can basically set it and then, return to it once a week if you need to kind of, review how things are going. So for me, I have specific earnings calendars, which are kind of, so we pull in obviously earnings data on global companies as well. And then for me specifically, I care about the specific range of market caps, as well as things like a diluted EPS, enterprise value overall. And then if you simply want to add other things as well, it's very simple to just plug in additional columns so that you can kind of look at things like, say, a price to sales ratio. And again, once you have these kind of presets, you can filter further. So if you wanted, price to sales ratios to be below, well, let's see, no, below 0 wouldn't exist, but price to sales ratio of 1. So anything that is less than 1 from a price to sales ratio perspective. And then you can filter by that so that you can look at the most lowest price to sales ratio companies in whatever kind of universe you're focused on. So I only have US, but we obviously have, again, global fundamentals data and global markets data. So you could actually look at the lowest price to sales ratios companies in France or Germany if you wanted to. So I think we're coming up on time, so I could probably stop there. And if there are any questions, more than happy to jump on those. But again, thanks guys. It's been a pleasure. And yeah, any questions that you guys want to follow up with direct, feel free to reach out to me on TradingView or on Twitter. We're always taking product feedback from customers. And so we're super happy to listen in if we can be helpful. So I'll jump into the Q&A. Let's see if we have any questions. One question coming from Ryan is, can you create alerts with API? Meaning writing programmatically to TradingView to build alerts that way. It's kind of the reverse. So we have webhooks for people to kind of, link out to various companies, but we have kind of the walled garden approach where you got to build everything on TradingView. The same goes for code, right? So a lot of people want to import their code into TradingView, and we kind of actually think the reverse. So we want people to code natively in Pine, and in fact, we have upwards of 10,000 scripts built last year. So these are kind of indicative of the number of kind of potential tools that people are building on TradingView. And crazy enough, these are all actually available for you to use at your discretion. So we have a bunch of built-in scripts. So like, these are things that come with the platform, but then the community basically creates a repository. And so, 70,000 or so people are using this specific indicator created by Lazy Bear. Chris Moody is super popular on TradingView as well, and has created a ton of different scripts and volume profiles, et cetera. And so to use some of these are restricted in terms of actually using the source code. But if I found something that seemed pretty interesting, like this is a pretty funny one that people thought was pretty popular the other day, I could actually look at the source code myself. And more or less, obviously what you see is a restricted version, but if you go up here and actually make a copy of that, you could code your own copy and then start changing around a lot of the fields directly from Pine, which is the editor. And you can save all your scripts natively, so you could build your own repository. I don't think I have any on this account. Let's see if I do. No, I think I don't. But yeah, that'll give you a sense of kind of what's actually possible there. Let's see. Is there any way to convert Pine into Python or vice versa? Well, so this is a request we get a lot. The language is pretty congruent, or they basically do talk pretty well together, if you will. But we don't have kind of a native translation package that would allow you to connect to Python. However, I mean, our kind of Pine coder community is always making requests like this. So stay tuned, because I do think that we have some upcoming information around, kind of additional usages of external languages. Whereas today we keep everything native to Pine. So Pine is kind of the bedrock of our language. What stage of integration with IB currently at? So I guess somebody has heard rumor that IB is going to be integrated to TradingView. While I actually do prefer the integration with Alpaca, because it is pretty streamlined, super efficient, and easy to use. We do expect IB to also come live relatively soon, and that's actually probably before the first half of the year. Can't say much more than that, but yeah, that's kind of a great kind of indication as to where we're headed. We're definitely always looking for more trading partners, and the reason being is, Alpaca obviously covers U.S. equity markets, but a good example is someone like Pepperstone or IG Markets, which are huge requests in Australia, Singapore, a lot of the Southeast Asia countries. So we're constantly integrating more trading partners to TradingView, and by doing so, hopefully being more helpful to a larger spectrum of global traders. Like I said, we have a global audience, so it's very important that we accommodate for everybody in some way, shape, or form. Funny enough, we actually just surpassed 30 million monthly active users, so it's a pretty kind of strong indication that we're doing well in a lot of countries.
Piers, I'm so sorry. We could all definitely hear more about TradingView, as I know I've used TradingView a lot in my trading and investing career. But we're gonna have to wrap it up now. I think that was an amazing presentation. If any other users have questions for TradingView, Quiver Quantitative, or Alpaca, we will share with the respective speakers today. So as we wrap it up, I just wanted to provide contact information for all of our speakers today. Again, here were our guests for today: Yoshi, myself, James, Chris, and Piers. I wanted to thank everyone for stopping by and speaking. We also have some contact information concerning the websites, the Twitters. So take a minute if you want to make note of any of this contact info. Again, the recording and the slides will be made publicly available, so we can share it then. And then, as we said earlier in the conference, we are going to have an after-conference Q&A. So once I end the webinar, you will automatically be prompted to complete an optional Q&A of 10 questions regarding some of the content that was discussed today, some more general market trivia, and we will be randomly selecting winners with the top scores to receive prizes, which consists of pro or premium plans from TradingView, subscription, a free trial for the Quiver API, and credit towards the Alpaca Market Data API. So we will be providing these packages to randomly selected winners. This is a limited 5-minute Q&A, and after you will not be able to submit your answers. And if you do choose to participate, you will have to authorize yourself with an email, just so we can identify the winners accordingly. But that being said, I wanted to thank everyone for joining us today. I want to thank our speakers for presenting. I wanted to thank everyone for getting an insight into some data and the importance it has for algorithmic trading and more in general, just trading overall. So stay safe and meet us at the next virtual conference.